Yeah.
So we were just listening to a presentation and yesterday, right? Was it Felix Zulauf?
Zulauf, yeah.
And he says that the advanced decline line today is not worth what it once was, or something like that.
Yeah,
right?
he thought it was going to be a little less effective with all the passive money instead of just buying individual stocks or buying all 500. So just pushing the breadth, kind of being an artificial lift to breadth, which is what the advanced decline line measures. And so he thinks it won't be as effective. So he thinks the next market top typically see a deterioration. Advanced decline line starts to go down before the market does. Less stocks rising. He thinks we won't see that at the next market top, whenever that is.
Well, that's a pre-Felix Zulauf. How do you use the advanced decline line? Do you use it at all?
I do. I get kind of thrown that I'm an anti-advanced decline. I'm a huge fan of it if it's used correctly.
Got it. How do you use it correctly?
I use it as the markets where the stock market truly is a market of individual stocks. So when you have, just like any other piece of breadth, you want as much participation of those stocks going up, telling you, hey, market's healthy, a lot of stocks are going up, market's probably going to go up too. Advanced decline line is a cumulative total of stocks going up and down. When it's a cumulative, it takes a lot more of the underlying change to impact it. It's kind of like an oil tanker going through the ocean. It's a lot more slower moving. And because of the way it works, you can have, it can hit new highs when you still have a lot of stocks deteriorating. So I think when you use the advanced decline line, if a lot of other parts of breadth are going down, you have less stocks making new highs, you have less stocks trading above long-term moving averages. And just because the advanced decline line is still strong, I think it's not something to negate everything else. So when it is, I think the best use of the advanced decline line is when it's deteriorating, not confirming. A lot of people say, hey, advanced decline line seeing new highs, that's great for the market, and it is. But it's not what that tool is meant to be used for. It was meant to tell you when kind of the tide's going out and less stocks are rising.
Got it. So what you're saying is that the advanced decline line is less valuable as confirmation and more valuable when it diverges.
Yeah. When you see those divergences, that's a big tell. It's saying, hey, there's not a lot of stocks going up, because typically it is confirming the market. It's almost always going up with the market.
Yeah.
But when you look back and say, hey, what about when it hits a new high before the stock market? That must be a good sign, right? You saw that happen right before the 2010 decline, the 2011 decline, and you saw it in January of 2018. So we've seen several of the most recent dips. Thankfully, we haven't seen a lot of them in the last 10 years, but 3 of them, you had that confirmation in the advanced decline line. And so when you look back at all the times that it's done that, it's done it all the time. It's a pretty common thing for breadth to rise before price. It's not a great, it doesn't provide a lot of insight outside of just being kind of looking at price by itself.
What about at lows? Because right, you're focusing on the tops. What about at bottoms?
I think again, when you see those divergences, when you start seeing the advanced decline start to bottom before price, great signal.
Yeah.
You don't see it happen very often, but when it does, that's significant. So something that doesn't really happen a lot happens.
So you're looking at it the same way in both sides.
Yeah, deterioration.
You know, I've always found breadth the more valuable information. I like to look at the 52-week highs and lows, right? So if market's making new highs and you're seeing your stock's making fewer highs, right? Same thing at the bottom, right? Market's making new lows, but fewer stocks are making new lows. That's an improvement of breadth. I think that's way more valuable. I also like to look at the percentage of stocks getting overbought, right? Showing positive momentum characteristics above 70, right? If we're seeing a deterioration on that list, right, that's also a heads up. I find both of those much more valuable than an advanced decline line.
And I think something that you and I share a lot in common is we look at kind of the weight of the evidence. We're not looking at just one thing and getting so tunnel visioned on this one piece of indicator just because XYZ is doing this, but everything else disagrees. So I think it's something that you and I both do a lot of, where we're kind of looking at everything and say, okay, here's what the bulk of the evidence is saying, because at the end of the day, no one knows for sure they're right or wrong. You just have to get as much...
You mean you don't?
I wish I did. But if you can have as much data to kind of sit on, then you can get a little bit more confident in the trade. And so I think when advanced decline lines are being confirmed by other pieces of breadth, more power to it.
I couldn't agree more.